Just one thing before I start with Vlad, and I'm really looking forward to this interview. Steve did send us a picture of him on vacation. So here's Steve here. If you guys can see it. Steve having a great time in a Speedo on Rome. Okay, and you know, he works out very hard, and you know, just when he's not on his charts, he's at the gym. And Steve looking great for a 4-year-old guy, you know. So now I'm going to go to Vladimir, who
enjoy the interview. Have a great weekend.
Yeah, I don't think Vladimir would look as good as you in a Speedo, even though I haven't seen him. I'm just guessing. But Vladimir Ribakov, welcome to F.A.C.E. I'm passing you the controls. Looking forward to hearing your voice, seeing your screen.
Hi there.
So you have that drop in. Hey, Vlad, how are you, buddy?
I am wonderful. What about yourself?
Good. It's what's it been, about 5 years
I wish I could
since our last interview?
Sorry?
Has it been about 5 years since our last interview?
Well, believe it or not, yeah.
Yeah, time flies when you're having fun, Vlad. I do want to get to your trading methodology and some of your views that you have on different instruments, but I'd like to start with, what was it that motivated you to leave your home country where your family is and everyone else, Russia being in the news? I know you left probably a few years ago. Why did you leave Russia?
Well, I was a little kid, to be honest, when it happened, and it was mainly because of the nuclear disaster we had in Chernobyl.
Oh,
okay. So we were living pretty much close to this area in Belarus, and my parents didn't want to take the risks, so we moved on. And as a little kid, no one asked me what I want, right? So I had to follow.
Okay. So your parents, so when you were a little guy, you left Russia. Where did you go initially?
We were from Belarus originally. Then we were in Israel. And
okay.
After Israel, I moved with my wife and my kids to Canada. So currently, I'm talking to you from Canada, not far from Toronto, a beautiful city called Stouffville.
Okay. Well, welcome to North America, my trading warrior brother.
Thank you very much.
I hope it's good for you. I hope it's good for you and your children, growing up in a nice, peaceful type of situation. Toronto's a sister city to Chicago, so I have an idea of what it's like. And why don't we talk about a little bit about the instruments and what you look for. And, I did a little preparation for this interview because I met with a mutual friend of ours, Giuseppe Bazil. And I know you do short-term work, but what I found fascinating is that Giuseppe told me that you do most of your trading personally off weekly charts. Is that an accurate statement?
It really is.
Okay. Well, you would be the first person, and I've interviewed almost 1,000 that makes, people look at weeklies, but they trade, they drill down, they may have an idea in the background of a weekly trend, but I've never met anyone who trades strictly off of weekly. So I thought that would be a great presentation. I know you're showing a daily, so this is probably pretty micro to you, but why don't you tell us why you trade with a telescope, not a microscope. So why don't you tell us what you're seeing here on the Aussie Kiwi here?
Well, no problem. Well, first of all, yeah, it's actually, I'm very honored to be the first one talking about dailies and weeklies. I know most of traders simply observe these time frames, just to, as you said, to have a background idea what's going on, where the wind blows. But during these years, actually, it's funny. I grew from 1 minute time frame, 5 minute time frame, and I finished the whole system around the weekly and the daily time frames combinations. Maybe that's because I'm getting older. I don't know. Maybe because.
Yeah, the day trading scalping game, for floor traders in the old days, and now, scalpers off the internet now, is kind of a young man's game. But Jack Schwager said, I said, what's the most important advice you could give a trader? And he said, find a trading style that suits your personality. So you had to go through all the different time frames to find something that lined up with, how you wanted to live your life without staring at the screen all day and looking for important developments in the market. So let me guess, you trade a whole lot less than you used to.
Yes, much less. Well, the whole idea for me now, I trade less, I invest more. I'm proudly saying, that all the short-term trading is done by my trading team. That's my personal students that are trading now together with me, supervising them. But right. They are the ones operating on the intraday.
For all your action junkies in your community.
Yes.
Okay. All right. So daily Aussie Kiwi. I kind of like it down here.
Well, I love that.
Go ahead.
Opportunity for few reasons. If you allow me to start from the monthly, and I hope you're not going to finish the interview because of that.
Please put up your decade chart where you only get a candle every decade. I'm interested in the monthly. Go ahead.
I really was interested to see what was there in 1920, but no one gave me the chance. So what I see currently, and it's enough to make an observation. We are here on the top of the levels. We are here on the bottom. We can curse this situation as a range, right? All that situation. Now I believe for the long terms in what I call the middle. I believe that everything in life always tends to go to our middle place, our balance place. Especially after being for a while out of the balance zone, balance place. So if we take the high and the low, the middle is somewhere here, roughly.
So a lot of people would call this mean. A lot of people would call this mean reversion. Is that what you're talking about? It comes back to a mean where it was just somewhere in the middle.
Yeah.
You get extreme.
As I said, you can name it as you want. The idea is the same. There is the middle, there is the center, there is the balance zone that was there for every single instrument out there. And later or sooner, the nature of the money, the nature of everything in this life is to go to this balance place, the same place where it feels the most comfortable with, especially if it was for a while out there. Now, the beauty of the Aussie Kiwi is, if we take a look on the times, how long it was out of the balance. Let's say this is the balance place, right? The middle, okay? Doesn't matter how we name it. These times that it was out of the balance zone are pretty much the same. They are, if we observe, it looks the same every single time. And now,
time-wise, they're pretty much the
same. Yes. Well, I'm sorry if my English is somewhere lacking behind.
We get it.
So I'll try my best. I promise. I'll try my best. I'm improving.
Fine.
In Canada, we are improving here.
Okay.
So that's the idea. And now it's pretty much long time below this middle point, which makes sense without talking technically. Makes sense for the pair to try and make a reversal later or sooner. Now this is a monthly chart. It might sound like a ridiculous thing. Who cares what's going to happen in 2020, right? But it is good enough to remember what kind of wind we will be exposed to on the coming future. And that's most likely, there are no guarantees in this market, right? But it's most likely going to be bullish wind. So from this place, I take it lower. And the lower, believe it or not, will be the weekly. And that's what we have here. We're still facing a very low now observation of a range. On the very bottom of the monthly, we have another range, which is the weekly. Besides all that saying, we have two beautiful trend lines meeting points. This is the first one, this is the second one. And this becomes a very serious pressure zone for the pair to start and develop some kind of bullish return. And for me, that's exactly the place where I love to start looking for my investments. My positions are normally positions that are going for a few months and not few days. Simply, as you mentioned before, because that's enough. I don't need to do more because it's enough for me to leave this style and trade this style. It does exactly the results I want. So dropping down to the daily chart, here comes the art I love to apply, and this is called the cycles, the simple money flow of specific instruments, given instruments. In that case, that's the AUDNZD. We can see that the pair was moving in two beautiful waves. Now, there are plenty of ways to call them: A, B, C, D, 1, 2, 3, 4, alpha, beta, gamma, delta, call it whatever you want, right? The idea is the same. That's how the price is developing. And what I like mostly about it, if we take any of these two, this is one, this is two, of the blue lines, and we break it lower, we can figure out that the first blue line was built by 3 little pushes, and the same happening with the current situation.
Right.
So each of these is
so it's like a fractal. It's like a fractal of itself.
I beg your pardon?
Kind of like a fractal, where you know what you see in one part of the market, you see repeated. Yeah,
yes.
Nice. Okay.
And that's what's happening. This is basic. That's a great format of a real money flow, because when the patterns are built the same way, are going pretty much in the same time, same period, developed in the same idea, in the same pattern, in the same combinations of waves, we got a clear read that there is enough money involved in this pair, and we got a hint for the bullish reversal by the bullish divergence. That is.
Yeah, I was going to get there with you because I know that's one of your tools. So, do you wait for entries for divergences on RSI or MACD? Which of the three that you have on the screen do you give the heaviest weighting to? And also, do you need more than one divergence to have more conviction, or is one enough?
That's a very good question. So the first answer would be I love the MACD. I know many traders prefer the RSI because it's on the very current moment with the relative strength of the instrument. For me, the MACD is the best representative of the volume, something we cannot measure for real in Forex. But the MACD for me does it on the best way due to the distances of the moving averages. So MACD for me is the main part, with the moving averages of it is the most powerful. The histogram is also a wonderful confirmation, and when they come together, that's a very good say from the market, like, okay, something is happening.
I'm going to try it, Vlad, because you know I'm a big RSI guy. I renamed it to the Real Simple Implicator, but I'm going to start looking at the MACD. Thank you for sharing that.
Yeah, with a big pleasure. You even may fall in love with that.
Yeah, I've fallen in love more than once in my life.
RSI also hints, by the way, the same idea. Something is happening. RSI has hard time to break lower this zone that it has. Sorry for my drawings. That's not my strongest part. But the RSI also suffers to create lower places. So that's what makes me believe that something is happening. For the second question you asked, do I require more than one divergence? Yes. And mostly it comes together with the MACDs. It's good enough for me if I have divergences on 2 time frames, but if I don't, I love to see it on the second indicator. This for me number 2, the RSI. Stochastic, I don't use unless I'm talking about hidden divergence, and then I'm looking for some kind of confirmation. But that's basically all. So that's the story here with this pair. I believe this is the zone, the 105 down to, and I know it sounds big, but again, it's important to remind that I'm talking about bigger ranges here, not the intraday trading, not the short-term trading. I believe this is going to be the reversal zone, and it could start any moment. It was false breaking here, hinting that the bulls are taking over. It is false breaking here with the divergence, so it could start on any of the
moment, any day now.
Yeah, it could start now. It could start
or there could be one more washout for a third drive, maybe. You know, what I'm interested in is when you trade, and do you scale in knowing that the area could, you know, maybe you have some on here, and if we go to a lower level and there's still divergence, you might add on. It actually builds the case and gives you a chance to build a position with a series of entries. And also the key question is, when you're trading with wide ranges like this and you're going to give the market a lot of room to breathe, what kind of leverage do you recommend people use?
All right, so for the first question, yes, I love to build up my positions on the go. So I start from a specific level, which I'll explain in a minute, and I love to add if it goes with me or if it goes without me. For me, there is an emergency exit. I don't use stop losses as fixed price for investment. I have an exit plan. What should happen if I get out? And the emergency for me is the maximum risk I can allow myself. According to that, I decide how this position will go. So if I throw my Fibonacci's expansion levels to identify the cycles, this is the first zone, which makes it critical, zone of 106. This is the second critical zone, which is also the bottom of the weekly range. These two levels are very, very powerful levels. This is the first place where I am involved. This would be the second place where I will be involved. And my emergency exit plan is if we get out of the weekly range and the divergence is basically broken, vanished, gone. In that place, I'll have to accept a loss and get out of the position with the maximum risk I allowed myself. That's the whole idea for me. Because of this nature of trading and investment, I don't use leverages. I don't believe in leverages. I think it's one of these tools that, well, unless it's controlled and on a minimal place for intraday trading, it can be risky for the beginners mainly because, you know, it's like it's borrowing money. When you borrow a lot of money, suddenly you don't know what to do with that. You allow yourself to go a bit nuts, and when you go a bit nuts, you suddenly find yourself in the places that you don't know how to control yourself. And the same idea with the leverage. So especially for the beginning, those who start their trading career, I think leverage is a very, very, very risky place. And if you use it, it has to be on a very minimal level.
Okay, great point. So you're trading unleveraged. And you know what? One of our great traders on our team is like that, Stelios Kantos. So yeah, and he has wide stops, and you know, you could sleep at night when you're unleveraged, can't you? Even though you're putting on size. And you need a large account to do it, to make it worthwhile, don't you?
True.
Okay.
You can do it with small accounts. It's
right.
Useful.
It would be like having a savings account. But okay, so you know, a real nice look on Aussie Kiwi. I guess the big question now for a lot of us FX guys, Vlad, would be, is this bounce in the dollar in the context of a bear market rally, or is something more significant developing in the dollar here with LIBOR going up, and because banks don't want to lend to each other because, you know, there might be dollar scarcity, and or is this going to be a great buying opportunity in euros, say around the 121, 120 level? What's your view on your macro with dollar and euro? They're the same, so you could choose one or the other.
you prefer to go back to the euros? No problem.
Okay. All right.
Let's do that.
Okay.
The euro is one of these pairs that you simply don't have a clear view on, and every day every new day you find yourself scratching your head even more and more and more, because saying, what the heck is going on with this pair?
That's why I asked you. So you don't know either.
Well, I'll tell you my view. Well, I'll make it simple. No one knows. Okay.
Okay, there you go. No one ever. You could have a view supported by evidence, whatever method you use. But even if you have a method, at times you don't know.
That's the whole game of probabilities here. There is no warranty, there is no guarantee, but whatever you see is right. You are talking about the game of statistics. You take your chance, you take your risk with proven evidences, and the entire idea here of this game, what you risk versus what you can profit if you are right. That's all. That's the game. And if you keep the positive balance in terms of what you reward more than you risk, then you have nothing to worry about, especially when we talk about the long terms.
Okay, what's your minimum R to R, Vlad?
Well, for me, it's minimum 1 to 2, and most of the times 1 to 3.
Okay. So all you need is a little better than a 50% hit rate to be successful.
Anything above 40%, I'm happy.
Okay. All right. So
and believe it or not, that's enough to make a great successful trading. Which it sounds impossible, but when you do the simple mathematics, you understand it's there. So for the euro dollar, the whole idea, the way I see that is, maybe you remember, maybe not, and that's fine. When I was preparing my 2017 annual forecast, everyone said I'm crazy because everyone saw that the euro dollar is going to 9.
Parity or lower, yeah.
And I was one of these crazy Russian guys to scream buy around 105. Okay. Of course, everyone said I'm just a kid, have no idea what's going to happen and why. But my analysis was exactly the same. I saw here a beautiful pattern of the monthly chart, which is a huge time frame.
Okay, so let me guess. Now we're in the balance zone.
Beautiful, exactly, and that's why. And this is exactly why no one can know what's going to happen. You nailed it. It's exactly what it is. We are right on the middle.
Okay.
From here, everything is possible.
And that was probably your target down there. You were looking for it to revert to the balance level.
125 to be specific.
Okay, beautiful. Vlad, go ahead.
From the long term, that's exactly what happens. That's exactly why the euro dollar currently behaves the way it does, and that means going crazy, going ranging, doing nothing, right?
Right.
That's exactly why it's on a balance zone. There are not enough buyers, there are not enough sellers, there is not enough interest around the balance zone, and this is exactly why it behaves like that. The European, with their own actions in the central bank, of course, right? What they wanted to do is to bring the euro to this normalization zone. This zone seems to be good enough for the Americans as well. This zone seems to be good enough for British as well, etc., etc. That's why the euro is on this area and it's holding. Looking on in terms of, let's go shorter a bit to the weekly. We have here two critical places. The first one is the zone of 125, 126, which gives this cycle. That's a beautiful double cycle confirmation. The idea here also was that the first cycle was built up with small push and a bigger push, and same with the second leg, small push, big push. So the way it forms give a great hint that this is a critical zone. We are talking about the 125, 126. Is that critical zone for the sellers to start to sell from? Maybe. It is definitely a great zone for the buyers to cash out, at least as for now. before they decide what's next. So the way I see that at this moment, we do have the level. It's around the 125, 126, which means it can dance around it for a while, and it will still be relevant. It will still act like a massive resistance and can still dance around it for many weeks. And
it's like a magnet.
Yes, exactly. But as long as it holds and as long as the divergence keeps its pressure, there is a good chance that we are still for the sell. And if that happens, the target for something like that has to be around the zone of 38 to retracement of this Fibonacci, which means in rough numbers around the 118 or slightly lower.
Okay.
Now, for that to happen, the euro must break this range. If it doesn't, it's a very simple hint from the market that the bears are simply not ready. And if it will refuse to break that and continue to hold, there is a very good chance we are going for the next level. And the next level,
more high. You'll have glaring divergences at that new high, Vlad, on almost every indicator you have. RSI won't confirm, I don't believe. I know it's predictive, but I don't think it'll get back to almost that 80 level we were at the high. We actually already had one divergence at the other high. So this could actually be the second divergence if we rally to new highs on the RSI.
It could, exactly. It could go and make it one more push to the range and crash. Yeah. It can, but the thing is here, it has to do one of the two things. One, break.
Right.
And hold. Otherwise, there is no bearish evidence. And as hard as it's, it's very hard to believe, but we don't have any low that is holding currently. There was one fake breakout here, and that's all. Yeah. So to look currently for long-term sales doesn't make sense.
Yeah.
And that's the whole thing here. So
wait, do you remember the rocker Tom Petty?
Yeah.
The waiting is the hardest part.
It is.
Okay, so we'll be waiting, and and you know what, Vlad? I'm not going to wait another 5 years for us to do this again. And I want to thank you so much for. It was great to hear your analysis, and
thank you very much
from you today, and you edified the community. Why don't you take this opportunity to perhaps show your website? You could follow Vlad at Vladimir Ribakov on Twitter, and maybe you want to show your website now.
So first of all, thank you very much for inviting me. It's always a pleasure to talk to you, and I hope I was useful to the people that are listening and gave some different look at what I call trading, right? What we call trading, and as you mentioned, you have
mission accomplished. Mission accomplished, Vlad. Okay.
So this is my blog, Vladimir Ribakov. That's the main website. This is where I update everything on every day, daily basis. My views, my ideas. We have a chat here. Of course, we have a lot of content here inside. My performance of my trading, not only the whole team. This is where we got our systems running, all of them. And this is the live performance when you can simply go and click on every place and find the entry and the exit we take. When, believe it or not, we do a lot of job for that to make that happen.
Yeah. A lot of work.
A lot of work, yeah.
I noticed you have cryptocurrency up there. Have you personally traded any crypto?
Oh yeah, definitely.
You like trading crypto?
Definitely. Nowadays a bit less because the volatility is much lower.
Right.
But definitely I love it. I think I belong to this community that think that this is the future, and the fact is that so many big companies and governments are looking into that just to create their own alternatives. Yep. Tells the whole story. It will take time. It might go ugly. It might be not so nice. But I believe these belong to the next generation of trading.
Wow. Okay.
I'm one
All
of
right.
those believers. And there is my the VIP club, the Traders Academy Club. This is the website, the Traders Academy Club. This is the members there. That's how it looks from inside. This is where I'm doing 2 live trading rooms on daily basis from Monday to Friday. And that's all. That's where I am. I'm on Skype, Vladimir Ribakov from Canada. There are few names, the same name, so Vladimir.Ribakov, and it's saying it's from Canada. That's how you can contact me if you have any question or anything you would like to ask or just say. So support at VladimirRibakov.com, and that's all.
Thank you, Vlad. I hope pips continue to rain down on you. Thanks for bringing your telescope for our interview today with Aussie Kiwi and going over Euro with us and talking about your methods. Appreciate you edifying our community. Thank you, my trading warrior brother. Good hunting to you and everyone you teach.
Happy weekend to everyone.
Thank you, Vlad.
Thank you
So
very
that's it, Faith. It's a wrap for the week. Hope you had a good week. Weekends are a great time to do your homework, plan ahead for next week. Lots of ideas from our guests, lots of great ideas from the team. Remember, most of all, don't just count your pips, count your blessings. And being able to do this and collaborate with you guys every day and have great guests like Vladimir Ribakov is a blessing to me. So have a great weekend, and we'll see you on Monday. Thank you, Vlad.